Hi everyone, today let's talk about China. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So China had their best day since 2008, and do we think they can keep up these kind of gains? China has been struggling for sure. They've been in decline, their population is in decline, but what that doesn't mean is that stocks can't rally, at least in the short term. They may seem a little bit overbought after the massive rally that they've seen, but they were so oversold that it seems like there's more move to the upside. You can see valuations here still very, very cheap, especially relative to their peers. And there are certainly reasons for that. Obviously, these companies are in China, so they have to deal with the Chinese government, which is obviously a huge geopolitical risk. And I wouldn't necessarily say that we need to buy and hold these stocks for a long time, but in the short term, there's definitely a meaningful recovery coming, especially after the news that China is going to inject a ton of money into the economy. And whether that has long-lasting effects to actually boost the economy, it's hard to say, but Chinese stocks are definitely feeling that move. So what happened? Chinese blue chip stocks up around 25%, major indices up 8% on Monday alone. You can see huge spikes here. We've been talking about it on the channel at least a couple of times now, but there's been a huge move. Remember, Chinese economy is struggling with deflation. GDP is deflating. So again, Chinese economy versus Chinese stocks, not necessarily the same beast, but historically, when you get these very, very low levels on the GDP deflator year over year, that is kind of a bottoming of markets, and then you see a reacceleration, at least over the past couple of decades. And like I mentioned, they did announce a huge stimulus package, including cuts to interest rates, mortgage rates, releasing $114 billion in financing. And they also have a plan to stem the property market falling and facilitate its stabilization. So we'll see how all of that plays. There's also another $280 billion here in bonds to help finance this package. And as a result, people are rushing into Chinese stocks. They think they're going to go higher on the back of this news. And typically that's fair. As GDP starts to rise, you can see stocks rally first off the back of that stimulus, and then we see them continue to rise as GDP goes up. So that's what people are hoping for right now. Is it an opportunity? Stocks have already jumped 20%, but they are so oversold. I think there's probably more in it. Again, short term, probably a little extended. You can see we haven't hit levels like this since all the way back here in 2014, 2015 in terms of relative strength and the fear and greed index. So definitely extended in the short term, but doesn't mean it can't go higher. In terms of opportunities, we've been talking about the yen, which is a triple leveraged. You could also get into the MSCI or MCHI. A couple of opportunities there. Either way, I think there's going to be some more to go. Moving over to fear and greed, we finished at a 74 up from a 72, but it was a little bit of a choppy ride here. You can see we were at 74 on the 30th, dipped all the way down to a 68 and then back to a 74. Momentum still in regular greed, strength and breadth still in extreme greed, so markets are definitely a little bit extended. Put call ratio starting to trend a little bit higher. That could be a leading indicator over the next week or so. And then volatility staying elevated, it's above the SMA. Again, volatility looks like it's set to go a little bit higher. And then looking at safe haven demand, extreme greed. This looks like it's trended back towards those peaks here, so maybe we see a little bit more outperformance before this rejects, but this is a critical zone already here around that 6.87 zone. You can see that is typically where it turns, so something to consider there as well. And then junk bonds actually pulling back fairly dramatically back into regular fear. Moving over to the AAII survey, stepped down to a 45.5 on the bull side. We've been in the 50s, just barely off of the 50s, and now we're back into the mid 40s. Seems like we're about to continue this kind of curve down. You can see how this trends. 3 weeks in a row of trending lower despite prices going higher. Sentiment continuing to wane there. The neutral percentage continuing to grow, 22 up to a 27, and then bears growing pretty substantially, 23 to a 27. So seems like this block is trending this way as the bears are starting to get a little bit more squeezed. Looking at seasonality, you can see this is still a bearish seasonal period all the way up until the 10th. Then we see a slight bounce into the Friday session. We'll see if that plays. Right now, markets are still holding up pretty well, so we're not seeing this kind of steady decline like we expected. It was pretty on par for September, but October seems to be a little bit more choppy. It's holding up early. We're going to see if this can hold here. But either way, election year or not, the 7th is a little bearish all the way up until the 9th, 10th, and then we see a rally out of that. So far seems like non-election year. But either way, looking at a bearish period over the next week. In terms of days, Monday, bearish, just like we talked about. Wednesday, a little bit more bullish, and then not much else for the week. This does end the worst 4 weeks of the year, so we'll see if we start to get that Santa Claus rally. And then looking at major things here, we got consumer credit, FOMC minutes, wholesale trade, CPI here on Thursday, and PPI on Friday. And then looking at the actual economic calendar, like I said, consumer credit for Monday. Tuesday, not a whole lot. You do have the 3-year note auction. We do have some bond auctions this week. Otherwise, not much there. Looking at Wednesday, 10-year note auction, FOMC minutes. Crude oil, that'll be interesting. Crude has been on a run. And then looking at Thursday, CPI, core and headline, 30-year note bond auction, Fed balance sheet. Forgot to mention FOMC minutes there for Wednesday, but that's definitely coming out. Initial jobless claims, that's been more interesting. We'll see if that continues to go higher. Previous number revised up pretty substantially. And then looking at Friday, PPI, Michigan data, consumer sentiment. PPI is expected to step down slightly on the month over month. Core and headline want to see those continue. And then for the CPI, year over year, 2.3, nearly at that 2 target for the headline number. Core want to see that step down, but it's still relatively elevated at 3.2. Moving over to max pain, you can see max pain for the Friday session quite a bit lower, 566, current price 563 almost. So about a 1% down move potential. Still tons of puts in here. This one doesn't give me that put call ratio, but obviously there's more puts. Look at them all relative to the calls. So maybe that gives you a little bit more room to the call side. Hard to say really, because we don't have the exact numbers or the most important strikes. And then looking at expirations, you can see they are all bearish from current price every single day. So Monday, nearly 1% down move, 0.7 there. And then for the Friday session, 1.2%. And then as we go a little bit further out, there are some big numbers out there, 2.25, 2.25. So markets seem to think we're going to go a little bit lower for those max pain finishes. We'll see if we start to magnetize towards those prices. Moving over to the chart, starting off with the S&Ps here, you can see we finished at a 0.22 for the week. Momentum still bullish. RSI just barely above the SMA. Last time we saw that, we rejected pretty heavily. So it'll be interesting to see if we get another follow through like we did on the previous. This trend line has been going lower, so that is a bearish indicator. Your next trend resistance is right here, up around 58.05. We'll see if we can reach that, get an official rejection from that trend line. Missed it the last couple times we've been this overbought. And honestly, I thought that would be the more important trend line. You can see it marks this perfect top back here in December of 21. We have overthrown both times we've been at this trend line here, so looking for a touch there. We'll see if we get the rejection from that. And then looking at the daily chart, you can see pretty strong push on that Friday session. Move down, consolidation, gap up, rally. You expect some follow through on that. Momentum swinging to bullish, RSI swinging to bullish. The daily chart does look a lot better here than the weekly chart. And then looking at the SPY, don't forget we are in this kind of rising wedge pattern. You do have the trend up there at 576.50 or so. Momentum and RSI look good. Looking to see a touch of that level. Maybe we overthrow it and then break down. Eventually, we do expect this to break to the downside. This is a short-term bullish pattern and a medium to longer term bearish pattern. And then looking at the Tasty charts here, you can see next ATR band is going to be 577.48. So right in that same zone that we talked about for that next price target, if we get the continuation to the upside. And then you can see these last two pushes above this most recent one did hit that upper ATR band, which is currently sitting at 591.92. That would be a strong move. I don't necessarily think we're going to get that high. If we did, I do think that's going to be your big head fake. Touch that level and then you get the final breakdown. ATR trailing stop did step up a little bit here today, so that does give you a little bit more bullish confluence. Your ATR trailing stop is all the way down at 523.96, so you can see we did touch that back here on the 5 August week, but haven't been anywhere near it recently. And that's what I would expect the push down to once we get this true rejection. So far, 4 bullish weeks in a row. And then looking at the daily chart here, you can see the ATR bands are trending up and to the right. So you have to play the markets you have, still bullish in the short term. We're back above the 8 EMA. Next ATR band is that 576.34 level. And then above that, you have 582.58, so a little bit more in between on that upper band, but they're definitely both within striking range. Momentum bullish. Haven't really seen any volume here on this up move yet, so would like to see some volume on the next Monday, Tuesday. and I do think we could see a bullish push during those two sessions. Moving over to the NASDAQ, similar thesis, 0.13 to the upside, so underperformed the SPY just a little bit. And you can see that next trend resistance is all the way up around the 20,500 level, which is right in line with these previous highs. Again, momentum swinging to the bull side, RSI right there. Previously, we didn't quite get to the SMA, but we are getting there now. So it'll be interesting to see if it does reject from here. Just like the SPY, it is trending lower slowly on the SMA. So again, starting to lose strength. Doesn't look as good as the SPY. We're much closer to those all-time highs on the SPY charts, but the NASDAQ does seem to be pushing in that direction. And looking at on the daily, similar thesis, low, high, slightly higher high. Looking for that trend here, 20,560 or so, right at those all-time highs, right in line with that. So looking for a double touch. If it does reject from there, that's going to be a double top, which could give you an indicator for some much more bearish price action. And then looking at it on the NASDAQ charts here, you can see I was watching this kind of trend, but really it is narrowing. You can see we missed it here. We're missing it here on those trend lines. So tightening up, looking for that kind of catapult style move up to this trend line here. Next level, 429. To the downside, you have support at 486.84. And based on current price action, you should expect a push to that next level. And then we'll see what happens there. If it breaks 500, right in line with these previous highs. And just like on the SPY, momentum bullish, RSI bullish, the daily chart does look better. And it'll be interesting to see which of these charts wins. Usually you would say the longer term, but I do like this daily chart a little bit better just in this particular case. And then moving over to the Tasty charts here, you can see we're not above that first ATR band. That first band is sitting at 590.30, so just below it by about $3 or so, waiting to see if we can get there. We rejected from it 2 weeks ago, looking to touch it again this week. We'll see if we can. And then your next band is all the way up at 509.07. That would be well above your all-time highs. I don't necessarily think we're going to get there, especially with this volume-weighted MACD not turning to the upside. It's been bearish consistently here all the way since 22 July. ATR trailing stops not rolling to the upside. Again, weekly chart looking a little bit worse. But looking at the daily here, ATR stops still flat, but they were trending up higher. We're still in bullish conditions. ATR bands definitely swinging back to the bull side, giving you a little bit more room. Second ATR band's your next price target. That's at 591.66. So again, $4 to $5 higher from current price. And then your next band to the upside is all the way up at 499.07, basically in line with your all-time highs once again. These bands continue to swing here, especially with that higher low setup. Momentum stepping to bullish on the volume-weighted MACD. Again, daily charts just look very bullish, whereas weekly charts are showing a fading momentum. Moving over to the Russell here, you can see it was down on the week, 0.54, but we ended up wicking this trend line here, which did stop me out. I did end up putting some puts back on as we saw this rally here into the Friday, but momentum stepping back to bearish, RSI stepping back below the SMA. You can also see high, lower high. This most recent high did throw some wicks above the high from the 26 August candle, but so far this is a double top at 226.49. We'll see if it has any follow through to the upside like everything else on the daily chart, but right here on the weekly, it seems more likely that we're going to get a candle more like 3 September with a big down move to that 21 EMA, which is sitting at 211.04, and then the trend support below that is all the way down at 205.37. We have been kind of moving up and to the right, but not without choppiness on the way there. And then looking at the daily chart here, you can see high, lower high. You could argue high, higher high, just barely, but we rejected off this trend line here, found some support at the 55 EMA, 215.40. Momentum stepping back to bullish on that Friday session, back above all the EMAs and SMAs. Want to see it push to 221.49 and then trend behind that at 222.97. We'll see if it can make that move here. If it can, and it breaks this kind of structure, I think that could give you a pretty strong push. Right now, it hasn't done it quite yet, but just like everything else, if we get a follow through on the Monday, Tuesday, I think there's going to be quite a bit more upside and potentially back up to this most recent high at 226.02. Moving over to the Russell on the Tasty charts here for the weekly, you can see that 8 EMA, which is your current support, 217.11. Again, right now, first ATR band is resistance. That's at 220.19. If it rejects from there again, we're probably headed back to the 21, which is in that 211.04 here on the Tasty charts. Momentum on the volume weighted MACD is actually a little bit bearish, but you can see these ATR bands, they are trending up and to the right. So in general, we should be headed in that direction. And then looking at it on the daily chart here, same thesis, push to that second ATR, pulled back to trend support. Up candle on Friday, you'd want to see that continue up here. First ATR band, 220.60, 224.66. Next level there is going to be 224.47. We'll see if it can push through there to these levels here. Overall, still bullish conditions with this pretty consistent pullback. Still lower lows on the pullback until this potential breakout here Monday, Tuesday. We'll see if it gets the follow through, and if it does, I do think there's quite a bit more in it. And hopefully we get a retest of this most recent high up around the 224.50 area. Moving over to the Dow here on the weekly, you can see we did throw another wick to that same level, 418.38. The low of week was 418.28, so we overthrew it by 10 cents. Momentum still bullish, RSI still bullish, still holding the trend here, which next week that trend is sitting at 422.59, your next level 426.20, which is the all-time high from 2 weeks ago. And then your trend resistance is all the way up at 428.33. We'll see if we can get the resumption on momentum, push back up to those upper trend lines. If that trend line breaks, then your next level is all the way up around 434.82. I don't really think we're going to go that high, but in the short term, it still does look pretty good here on the Dow. And you can see that same general thesis on the Friday session. Gap down, gap up. You would expect some continuation here on the Monday. Momentum and RSI both look okay headed into that session. Moving over to the equal weighted S&Ps, you can see this is actually down on the week, 0.2 to the downside, inside candle. Tested 177.25, found a bounce from there. Momentum and RSI are still bullish, but volume coming through on that down candle. The concern is you get a candle like this one back from 3 September where you get another fall down to that 9 EMA, which is sitting all the way down at 174.22. It'll trend up a little bit here for the next candle, but really not by much. 175.38, probably right in that region here. And based on that, that would be a pretty substantial down move, somewhere around 2% lower. But once again, looking at it on the daily chart here, everything looks okay based on that Friday candle. Downtrend, couple of candles, gap up, retest, continuation. Next level to the upside would be 179.52. 179.94 is my next level. And then if it can push through there, the next trend is sitting all the way up in the 182, 183 area. Momentum stepping back to bullish, RSI not quite there yet. Still below the SMA. Moving over to the ratios, the SPY did outperform the Russell just by a little bit, did get back above this 259 level, so that is a break. It's right into these levels we saw on 12 and 19 August weeks, but based on my rules, you would expect a continuation to 266, so maybe the Russell underperforms a little bit this week. And then looking at the NASDAQ, inside candle, hanging man candle, momentum still pushing to the upside, but look at that RSI. We rallied up right to that level. We're starting to see a little bit of a breakdown from there. So maybe the NASDAQ starts to underperform a little bit this week. We're basically on par with the SPY, but we're hitting key resistance levels. We've had a series of lower highs here. Maybe this is just another one in those series. We held up okay this week, but get the follow through in next week. So NASDAQ underperformance, Russell underperformance, SPY looking to do the best of the group. Moving over to SPY divided by the M2 money supply here, you can see we are still stuck at this level, 27.25 key resistance. We hit that level 2 weeks ago, 27.24. We're calling that a touch. But this week, we're about 100th lower. Momentum still swinging to bullish. RSI right there, just barely crossing above. As that SMA continues to trend lower, price continues to trend higher. So critical zone here, waiting to see what happens. If it breaks out, maybe we have a continuation to that 28.50 level. Maybe we get a bit of a fake out, breakout, fake out, push back down to 25.91. Right now, key resistance, waiting to see if we can get that break. Moving over to Apple and Microsoft, getting into the individual stocks here, you can see Apple down 0.43 on the week, momentum bearish, RSI bearish, hitting resistance and selling off. Still in the same zone that we've been in, 224.36 up to 230.28. Haven't broken from there in either direction, but another rejection from here is not a great indicator of more bullishness. And then the setup that I probably like the most, honestly, here is Microsoft to the downside. I think 413.36 is going to break, and as soon as that happens, I do expect a pretty aggressive push down to that 55 EMA, which is at 400.76, so about $16 lower from current price, and then below that you have the trend here around 396.95. So big down moves expected here for Microsoft. Bearish momentum, bearish RSI. I do expect this to break down pretty substantially. We've been watching the structure for a couple of weeks, and I do think we're going to get another down move. This week was pretty bearish, 2.79, and I think there's more to come. Moving over to Tesla and NVIDIA, a little bit of a different story here. Tesla down 3.99. We hit the price target, 264.68. High of the week was 264.86. So we overthrew that just by a little bit. Momentum still bullish, RSI pulling back to the SMA. The structure is still bullish. I do think we're going to hold up at a higher low, but for now, I think we're probably going to see a little bit more downside. Current support 232.57, waiting to see what happens there. And then the 200 SMA sitting as support at 236.22. So think we're going to continue to fall a little bit more, find some support in here, and then we'll see what happens. And then NVIDIA, strong week, 2.9%. We did close just barely above my level, 124.69. Think we're probably going to push to 130.35, so that's about $6 of potential upside, $5 or so. And then if that breaks, we do have some trend resistance all the way up around the 139 area. Very similar to some of these other structures we've seen with a higher low, higher low, higher low. If we do get a continuation, you eventually expect this kind of flat top to break, in my opinion. I would expect this to continue higher. All-time high is 140.76. Moving over to Amazon and Alphabet. Amazon down 0.78. Alphabet caught another up move here. We've been talking about this clean move. Once we dojied, we had that consolidation and then the break higher. So we thought we were going to get another move here on Alphabet, and sure enough, we did. Price target right now is 170.95. It's about $2 higher, another 1% higher. Momentum swinging RSI right there at the SMA. If it's going to reject, it's probably going to do it this next week. If it breaks out, we should have some more upside in it. So 21 EMA sitting as resistance right there as well, 172.02. Maybe it throws a big wick to that level and then we get the bigger breakdown, rejection from the 21. If that happens, then that's a big change of structure for me. Rejection from the 21 means that this is going to move down much, much further in my opinion. And then looking at Amazon, 21 EMA was support. That's at 183.03, hit the level as well, 181.41. So touch the price target. After this rejection here, got the continuation lower, touched the level. Did catch the bounce on Friday like everything else. So we'll see if that gets any play to the upside. But technically, hanging man candle, continuation below the 188.61 level is resistance. Should give you a little bit more downside in my opinion. Moving over to staples and discretionaries, big down weeks here for both of them. Staples falling off a cliff here, breaking the trend line, looking for VWAP as your next support, 80.59. Ended up down 1.87%. 21 EMA is your next support after that, down at 79.55. I do have some levels between here and there, but dynamic support says this should fall quite a bit more. Momentum bearish, RSI bearish, big breakdown there. Volume spiking on the down candle. So it looks like staples is getting a pretty substantial pullback. And I would be patient here if you're trying to stay long staples. And then discretionaries, inside candle, hanging man candle, momentum basically flat, RSI pulling back. Again, probably going to pull back at least to this previous high, my level 193.81. We'll see if it can hold there. Otherwise, 9 EMAs all the way down at 189.23. It's been a really strong move. You can see 3 weeks in a row, very powerful, 5.5, 2.2, and then 2.11. Now we're down 1.3, so we'll see if this pulls back some more. It probably will. It's definitely extended. It hit the price target we had here once we had the breakout here, so hit the level. Probably going to see some more pullback on both of these. Moving over to oil and gas and transports. I've been following these for a little bit now. Oil and gas had a huge week, 7.36% to the upside. Huge volume ramping, momentum ramping. I think there's going to be more to this here. Next level, 145.92. Level after that, 154.13. You can see the highly traded zone is there at 145 as well. So looking for at least $5, probably some more here on oil and gas. It's been a downtrend. We had a consolidation. We're looking to get that breakout here above these structures. And that would be a break of this low here as well from that mid-June time period. I think oil and gas has some in it. And then looking at transports, rejection off 69.29. 3 weeks in a row we've rejected from there, closed pretty bearish, 1.92. Momentum here stepping down, RSI stepping down. This is a bull trend still, so it is still above all the EMAs and SMAs on the weekly. And this could just be a pullback like we saw here, and then we got the continuation higher. Could just be a short-term pullback, but it wouldn't shock me to get a little bit more downside like we did here, where you kind of gap up, throw a big wick lower, hit that 55 EMA, and then continue the rally up. So something to consider like that. That was also kind of in the upswing. Right now we're getting a step back down towards bearish, so maybe there's a little bit more in it to the downside. If transports go, the Dow's probably going to go with it, and we'll probably see the rest of markets start to go lower. Use this as a bit of a leading indicator, and right now it's showing a little bit of pullback. Engulf the previous candle, probably a little bit more to go. Moving over to wood and gold, you can see we did get a bit of a hesitation candle, hanging man candle. Momentum still bullish here on both of these RSIs. Super overbought on gold at a 77.92. Don't see that super often, so maybe we're going to find a little bit of resistance here around the 140, around the 246, 247 area. Wood, on the other hand, did find a new wick high, but ended up negative on the week. Candle of indecision, waiting for a clear move. Could go either way. Based on the hanging man, you would expect a little bit of follow through to the downside, and it's certainly extended here, well off of that 9 EMA, and you can see the 3 very powerful candles in a row. Usually get at least a little bit of a pullback after that, so See how it plays right now. Indecision on both of these. Moving over to the 20 and 50 day, you can see both of these were bearish on the week. 20 day looks like it has a little bit more in it to the downside, step towards bearish, RSI breaking down, tested 51.75, tested all these EMAs and SMAs, but I think it's going to break down more. Kind of like this, short-term down move, big follow through. We'll see if we get it or not. Definitely looks like it might. And then looking at 50 day, similarly here, small down move, engulfed the two previous candles, hit some support levels, found support there. Momentum stepping down, RSI right at the SMA. Needs to hold here if it's going to do it. If not, this is probably going to roll to the downside. A little bit of a mixed indicator with the rest of markets looking a little bit bullish on the short term. Remember, this is the weekly chart. We could get a push Monday, Tuesday, and then get a continuation lower Wednesday, Thursday, Friday. So we'll see how it plays, especially with the inflation data later in the week. Moving over to 200-day breadth, you can see really indecisive here. We did get back below that 76.04 level, which is an important one, but we've been chopping on that for a while now. You can see we got here back in January, choppy in the same zone. We held some higher lows here. Again, that would give you a little bit of downside, and then we would look for a little bit of a continuation off of that. So rejection from this zone, looking for a little bit of a down move, catch a higher low, and then we'll see what happens. That's kind of what it looks like for now. If it holds this higher low in here, if it breaks down from there, then it's going to be a fake out break, and then we're going to look for some more downside. So critical zone, wait and see what the reaction is from these areas. Moving over to 2-year and 10-year, both of these had massive weeks off the back of that jobs report. 2-year jumping 10.1%, 10-year 5.7%. Managed to stay just barely normalized. Talked about it on the Friday video, but momentum on these, both swinging to the bull side, RSI swinging to the bull side, probably more in it to the upside. And usually we expect equities to go down when yields are going up, but that's not what we saw in the Friday session. Everything rallied, yields and equities going higher. But I don't expect that to continue. If yields continue to go higher, equities will turn down, in my opinion. Moving over to the dollar, big spike up here on the dollar as well. Interesting to see that having a big move, 2%, fully engulfed all of this consolidation, clear breakout. Looking for 102.98, trend line sitting behind it at 103.2 or so. 21 EMA just behind that at 103.37. So dollar, big move. Again, usually when the dollar is going higher, equities are not, but we did see an everything rally on Friday. We'll see if it can hold those gains while both yields and the dollar are going up, but it'll be interesting to see how this plays. I would expect this to continue higher here. Very strong candle, big impulsive move off of a solid base. Probably some more dollar bullishness here to come. Moving over to JNK and TLT, both of these were a little extended to the upside, and now we got that big breakdown here. So TLT falling 3%, 21 EMA, your next support at 95.11 here on the weekly. Below that, you got the 55 down at 93.18. With yields finding some strength, you would expect these to continue a little bit lower here. JNK 96.51 is your next support. You do have the 9 in there, but I'm going to guess that's going to break here. That's 96.77, and then VWAP below that at 96.13. So not a whole lot of movement, but I do expect these to kind of pull back a little bit in the short term. Structurally, I think they'll find some support and continue higher eventually, especially as we get closer to those next 2 cuts we're going to get from the Fed this year. And I do believe both of those are going to come to fruition regardless of the data. I don't think the data is going to be enough to move sentiment within the Fed. So I do think these are going to go higher over the medium term, but in the short term, they look a little bearish. Moving over to the VIX, the VIX found a strong week, 13.27%, momentum stepping to bullish, RSI stepping to bullish. We did hit some of these trend resistances from this kind of grinding action that we saw here before we saw this bigger down move and consolidation. We'll see if we can get another push up to this zone here. That's up around 22.5. Based on this, we've been holding higher lows. We threw some wicks, but on the closing basis, we've held those levels. Momentum and RSI are bullish. Again, that indicates we should see a little bit more downside. So definitely some mixed signals. Weekly charts showing bearishness, daily charts a little bit more bullish. But overall, the VIX looks bullish, so we should expect equities to be bearish. Moving over to my accounts, I actually did pretty well, about $700, $750 on the week, somewhere in there. In terms of positions, 218 put for the IWM. Watching that one closely. Again, daily charts say we could see some bullishness, but weekly charts are showing some bearishness, so remaining cautious, selling some puts for now. We'll see how that plays in the Monday session. About $60 or so left on that as a potential profit for the Monday. And then looking at the Qs, pretty deep in the money on this, actually out to Tuesday at 483. for $6 credit. So max profit is going to be $4.89, or about $2 higher from here over the next 2 days. Gives me a little bit of potential for some upside, but still decent protection for a 1% down move. Actually, a little bit more than that if you include the credit. So we'll see how it plays. Right now, expecting a little bullishness into the Monday, Tuesday. Let me know down in the comment section what you think about the Chinese economy and the most recent Chinese stimulus. Is the stock market going to continue to go higher even after these massive rallies, or should we be patient in the short term and look for a better price? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.